Welcome. Thank you for joining us. ERSGA developed this presentation to provide general information about Georgia Senate Bill 176. That is how it impacts employers and how it impacts retirees. In the case of any conflict between this presentation and the laws of the system, the law takes precedence. I am Flavia Pinedo, the Assistant Division Director with the Financial Management Division here at ERSGA. Georgia Senate Bill 176 was signed into law in July 2020 and will be implemented effective January 1st, 2021. It introduced an employer cost for ERS retirees returning to Georgia state employment. The cost is calculated based on 1, a retiree's contribution group at retirement, 2, the contribution group rate during employment. This includes the employee rate plus the employer pickup if it applies, and the employer contribution rate minus group term life insurance. Also, it includes the salary earned while the retiree is back at work. How is this calculated? Here are examples to illustrate how the employer cost is calculated. Say an employer has hired a retiree whose contribution group at retirement was old plan. In July 2020, he or she earned $1,000. The rate of the costing would be 1.25% plus 4.75% minus $7 plus 19.91% for a total rate of 25.91% minus $7. Multiply this by the $1,000 earned, and you'll get a cost of $252.10 for the month of July 2020. Say an employer has hired a retiree whose contribution group at retirement was new plan. In July 2020, he or she earned $1,000. The rate of the costing would be 1.25% plus 24.66% for a total rate of 25.91%. Multiply that by the $1,000 earned, and you'll get a cost for July 2020 of $259.10. Say an employer has hired a retiree whose contribution group at retirement was GSEPs. In July 2020, he or she earned $1,000. The contribution rate for GSEPs for July 2020 is 1.25% plus 21.57% for a total rate of 22.82%, which gives us a cost for July 2020 of $228.20. If an employer would like to estimate the cost of hiring an ERS retiree, or an employer already has ERS retirees on their payroll, they will need two things to calculate that estimate. They'd need the person's contribution group at retirement and the contribution rate, the current contribution rate. All employers have an ERSGA contact with access to the ERSGA employer desktop. The module Check Member Plan Eligibility on the desktop can assist with identifying the contribution group at retirement. Follow the steps as outlined, and where the membership status displayed is retired, the current contribution group displayed is the contribution group at retirement. So say, for example, you have someone that you've entered their information into the module and you've clicked retrieve, and the membership status says retired, and the current contribution group is new plan. That means that for that person, the contribution group at retirement is new plan. How does an employer determine the rate of the employer costing? The employee contribution rate is the same for all ERS contribution groups. That is except for Supreme Court justices and Court of Appeals contribution groups. The employer pickup which applies only to old plan contribution groups, is always 4.75% less $7. The employer contribution rates vary by fiscal year. ERSGA publishes a copy of the rates for the current and upcoming fiscal years. On the ERSGA website, under the employer page, employer forms and information, you'll find the rates for fiscal year 2021 and fiscal year 2022. So the employer costing rate is going to be an aggregate of the employee contribution rate, which, as I mentioned before, is always 1.25%. The employer pickup rate, if that person's contribution group at retirement was old plan, which is 4.75% less $7, and whatever the current rate of the employer contributions are. So it's going to be an aggregate of 2 or 3 depending on the contribution group at retirement. Which employers are affected? All employers defined under Georgia Code Section 47-2-1 and 47-2-112 are impacted by Senate Bill 176. This includes Georgia state departments, state authorities, DFACs, health departments, etc. Basically, any employer currently reporting an ERS member is impacted by Senate Bill 176. Employers are solely responsible for all costs for which there is no benefit to the employer. Although the employee contribution rate is a part of the calculation, it is the employer's responsibility. What is the impact to retirees? The costs apply to current rehired retirees and future rehired retirees. That is, those people who retired under ERS. It also applies regardless of job status, that is full-time or part-time. There is no cost to the retiree. It is the sole responsibility of the employer, and the retiree does not accrue additional service or benefits. If a retiree is hired as an independent contractor who meets all independent contractor criteria, the employer is exempt from the employer costing required by Senate Bill 176. An independent contractor is defined as a person or entity contracted to perform work for or provide services to a Georgia state employer as a non-employee. That independent contractor must meet all 3 criteria, and the employer must certify that he or she does, to be exempt from Senate Bill 176. Criteria 1 says that the contracting person, which in this case is the independent contractor, or entity which could be a third-party contracting company, must have multiple employees. Criteria 2 says that the contracting person, which is the independent contractor, or entity which could be a third-party contracting company, must have multiple contracts, and the contracts are not limited to employers as defined in OCGA 47-21-1. In other words, the contracts are not limited to Georgia state employers. Criteria 3, the contractual relationship with the employer was not created to allow a retiree to continue employment after retirement in a position similar to the one they held prior to retirement. So the independent contractor must meet all 3 criteria, and the employer must certify that he or she meets all 3 criteria to be exempt from Senate Bill 176. What will change? There are no changes to return to work restrictions for retirees. The 30-day wait for normal retirement age, the 60-day wait for early retirement age, and the 1,040-hour restrictions prior to Senate Bill 176 still applies. Rehired retiree reporting also remains the same. The salary and hours worked are reported in the file or entered on the ERSGA website for employers to review and approve. What will happen in this case is that for any salary that's approved, that salary will be used to calculate and create an invoice that will be available for the employer to pay. The payment submission for the invoices will be similar to how employers currently submit payment for summary report or for forfeited leave. The frequently asked questions section on this topic is now available on our website, and we will continue the webinars for the first week in December of 2020. Training will be conducted in January 2021, and we will go live on February 1st, 2021 for January reporting. If you have any questions after this webinar, please send those questions to ers.fmd@ers.ga.gov. This brings me to the end of the presentation. Thank you.